In this video, I'm going to talk about how to invest in crypto during a bear market and become a crypto millionaire. Hey, what's up guys? My name is Chase and this is a penny pincher's guide to personal finance and investing. Go ahead and hit that like and subscribe button if you want to get more videos just like this. Let's jump right into the video. So I'm going to go ahead and start off with a controversial saying that you make more money during a bear market than you will during a bull market. So what am I meaning by that? Well, if you are buying into a cryptocurrency during the bull market, then your potential gains are going to be a lot lower than if you had bought in during that bear market and then held on to it and waited for the potential move into a bull market. During market drops and recessions actually is the time where the most wealth transfer is occurring. People are becoming a little bit more emotional because as we all know, investors are more often investing based on their emotion than on sound reason. And because of that, that can actually lead to big dips and dives in the cryptocurrency space. And because our emotions are going to be driving our investing decisions more often than not, then we need to actually take that into consideration when we are investing. And because people are a little more emotional, and the most common emotion that is going to be driving their decision is going to be fear. Fear in conjunction with uncertainty and doubt, FUD, is what is driving a lot of the market sentiment and leading to this bear market in the cryptocurrency space. Fear is what's making people feel like they are missing out on certain opportunities with the cryptocurrencies, and what is also making them think that they are going to be losing a lot of their hard-earned money down the road. And this emotion, fear, is causing people to become scared, panic, and then selling their positions, leading them to realize their loss and losing all those potential gains that could come if they were just to hold on during that upcoming bull market. So let's go ahead and jump into exactly how you should be investing in a bear market in the cryptocurrency space so that you can continue to make some money and make it to your first $1 million. All right, so number one is going to be that we are still early in the cryptocurrency space. There are a ton of people out there that are just now learning about cryptocurrency in addition to just hearing about Bitcoin or Ethereum, and the potential growth because of how much this is actually reached in the world is going to be huge. I know it kind of sounds weird to think that with the world that we're in right now, that there are people out there that haven't heard of Bitcoin or Ethereum or any of the other cryptocurrencies out there in the projects. But there is a really small percentage of people that are still right now investing in Bitcoin and Ethereum, and we're starting to get corporations and big money into that. And so as that more of that money will flow into that will continue to drive the price up and up and up. So it is early. And some of you might be saying that it was actually $60,000. Bitcoin was $60,000 earlier in 2021. Well, that may be true, but we have seen time and time again that it has gone up and down pretty steadily. And because of this market fluctuation, people are going to get more traction associated with it. And that actually can lead to more market sentiment potentially increasing in value. And because that, there is still some unrealized gains associated with that, unrealized value that will still continue to grow because it is so very new. There are a lot of experts saying that it will reach up to the $200,000 or $300,000 mark. And because of that, there is still potential for it to continue to grow. All right, so the next thing that we're going to talk about is going to be focusing on a consistent investing practice. And this is going to be the true not only for cryptocurrencies, but also for the stock market, or if you're going to be going into real estate. You should find a plan and stick with it. And no matter what happens, you should stick with your plan down the road. What I would recommend is I would find a strategy that has consistently paid out by looking at past statistics and past price markets, and then adopt that strategy and consistently follow it down the road. You're going to want to focus on a proven strategy and stick with it. One of my favorite strategies for investing, not only in the cryptocurrency world, but also with the stock market, is dollar cost averaging, DCA. Basically what this is that you are going to be buying in on a regular basis, whether it's every Monday or you're doing it every week, or if you're doing it twice a month. It's going to be you're investing a certain amount into the same investment portfolio on a regular basis. No matter what the price is, you're sticking with that particular set requirements. And what you're doing with this is you're taking out the emotion associated with investing, which is one of the biggest parts that we talked about earlier in this video. And because of that, you're not having to worry about, is this a good time to invest or not? Because as the market goes up and down, you're buying and averaging out a certain amount, And over the long run, because you know that you are buying into a cryptocurrency that you believe in, because there is a high market cap, because there is a project that you think is going to continue to grow, that you know that down the road, the average that you're buying in right now is going to be a higher value when it matures. The next thing is that is going to help you continue to make money during a bear market is to focus on decreasing the volatility in your portfolio into the cryptocurrencies that you are focusing on. The best way to do this is going back to the dollar cost averaging aspect of it. And because you're buying on a regular basis, there is going to be a sustainability and a decrease in the volatility because you're not having to time the market, and it's going to continue to average out over time. Also, you're looking into particular projects that you believe are going to be growing down the road. And because of this, and you know their fundamentals are great, you looked at their white papers, you know that this project is going to steadily grow. And so the volatility will potentially be less because you know there are a lot of other people out there that believe in this project and are going to continue to buy and hold this down during the bear and up until the bull market. The next thing I want to talk about is still going back to the DCA method, but there are a lot of different cryptocurrency exchanges out there that are giving you the option to actually dollar cost average and make it automated. And so for me personally, I'm actually using the On Juno pay yourself in cryptocurrency, and there is a portion of my paycheck that is being transferred to the On Juno account and then automatically is being invested into cryptocurrencies without any fees, which is pretty great. And so they have a couple different cryptocurrencies that you can actually invest in on a regular basis, from a lot of the big ones like Bitcoin, Ethereum. They'll allow you to get into some stable coins like USDC, and they're allowing some additional other smaller coins out there that you can invest on without having to have any fees on that, and also taking out the emotion. And so now on a monthly basis, you're getting into cryptocurrency. There is no emotion associated with it, which will also decrease the volatility. And in the long run, as expected for the cryptocurrency market to continue to grow and grow and grow, you're going to make some money. So in the end, no one can really time the market. Despite all the courses they're trying to sell you, how much money they've made in the past, it's not that easy. And if it was, then everybody would be doing it. A lot of the big hedge fund managers out there try to sell you to the fact that they are able to find portfolios and stocks and continue to make money. But the fact of the matter is, if you were to just buy into a total stock market index fund and on dollar cost average into that on a regular basis, then that beats most of those index fund managers out there. And so the same thing is going to apply to the cryptocurrency space. If you are buying into some solid cryptocurrencies on a regular basis over a long period of time, then you are more than likely going to beat out the majority of the people out there and make some money. So in the end, you need to find an investing strategy that works best for you, find some projects that you believe in, and stick to it. And that is how you're going to make your next crypto million. I hope you got some great information from this video. Thank you so much for watching. I hope you have a great day. And as always, we want to remind you that we are here from your first penny to your first million. We'll see you next time.